Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Okay, so today we'll talk about market analysis. So when we generally talk about market analysis, the first thing everybody goes to is technical analysis. And technical analysis is a large part of what we do in our Forex trading. However, that's not the only type of analysis that we need to do as traders. So there are a few reasons why we generally just go to technical analysis when thinking about market analysis. First of all, it's easier, right? It's just so much easier to just look at charts and say, where will something go? And it's also it's a technical aspect that is the most easiest to learn. So it's easy to look at something. So when we are looking at charts, it's easy to say, for example, so I'm in a pound yen short here, right? So it's easy to say, okay, price is holding below this resistance level. And even when it went up here, it shot up, but it's holding below this resistance level. That means it's, as long as it holds below here, I would be looking for this move lower, right? So, and here we have our pivot point support level. So makes sense, right? It's easy to understand and it's easy to teach as well to someone, okay, because this is there's no confusion about it. It's very clear. So the way the candles look, so this is an indecision candle, right? It's easy to show that this is an indecision candle because there are wicks on both sides, small candle body, market is undecided. Same thing here. And it's easy to say indecision candles are formed at turning points, right? So all of that is easy. Same way we learned about bullish engulfing candles. So it's easy to say pivot point held and we have a bullish engulfing candle. So now we're looking for a move higher, right? Very much easy to understand this type of stuff and learn that. However, that is not the only thing that we need to learn when it comes to market analysis. So market analysis, there are a few different components to it. So technical analysis, like I said, is the most widely used. So we have to use it. It is a very good tool. It's something we will use all the time. So that's one. But beyond the technical analysis, so our course will focus on technical analysis. So 80% of what we will go over will be technical analysis. And this is why, because it does take a little bit longer to learn. So we will be focusing a lot on technical analysis because we do need to understand the charts. However, beyond that, another thing that we will also focus on a little bit more than we have in the past, or you may have in the past, is the fundamental analysis. So what is fundamental analysis? Fundamental analysis is actually looking at our news, first of all. So understanding what is happening in the market. So one of the errors that everybody makes, especially when we are starting as a beginner, is to say that the market is driven by the technicals, right? Or this is a mistake that is so very common in the industry that we just think, market moves because it comes into a resistance level, something happens, and then it's going to stay below or hold above. That's not true. The reason the market moves is because of what's going on in the environment, in the world that is impacting prices. So prices don't move because of the technicals. Prices move because of what's going on, but they respect the technicals. And this is a slight shift in thinking, but it is a critical shift in thinking. So if you wanted to become a successful trader over the long term, so if you wanted to make a career out of it, then that's an important thing to understand. So for example, if you're playing golf, for example, You may think that as a beginner, I would think that I need to understand how to hit the ball right, how to get the mechanics of hitting the ball correct. So I would be more concerned about where the positioning of my feet is. How am I holding the golf club? What angle do I need to strike the ball at? However, the reality is that it's a big part of playing golf. Senior golfers or golfers that are more experienced will tell you, but will look at is the direction of the wind. Right. So they will look at a lot of different environment variables. They look at the grade. They will look at a whole lot of different things, which I'm not a golfer. So, but the point is they look in their environment, because it doesn't matter what your technicals say. If your environment is not correct, you will have to adjust things according to your environment. So a golfer will hit the ball differently if the wind changes direction, right? So it's the same golf club, it's the same everything, but they will change the position or the angle of the way they hit the ball, and they will make a lot of adjustments based on the outside condition. If it's raining, if it's just drizzling or pouring, you're not playing. But even in football as well, they play in snow, they play in rain, they play in windy conditions. So if you're playing football when it is snowing, you're going to have to adjust the way you run your plays, because the problem will be when you're trying to catch the ball, your hands are going to be frozen. That's just how it is. Doesn't matter what kind of smart wool gloves or whatever gloves you're wearing, your fingers will be frozen. So a ball that you would be able to catch without a problem in under normal conditions, you will not be able to catch it in the same way when it is snowing and your hands are frozen. And because the problem would be the quarterback is throwing the ball in a different way as well. He doesn't have the throw that he would normally have because of the conditions, because his feet will be slipping. The ball will be slipping out of his hands. There's a lot of factors that will come into play. So even though the cut is the same, a wide receiver will make the same cut regardless of what the conditions are, but the mechanics of how you will catch the ball and throw the ball and how you will adjust how far you will cut will be different because of the environment that you're playing in. Same thing when if you're playing in super hot, muggy environment, you're just going to have to adjust to that. So that is the relationship between technicals and fundamental analysis. So fundamentals tell us what the environment is like. We do need to understand the technicals, but then once you're comfortable with technicals, you need to start looking outside and understanding what is the direction of the wind, how fast is the wind, is it snowing, is it raining, and then adjust accordingly. So how do we do that in terms of our trading? The way we do that is we look at first, the easiest thing to do is to look at the Forex factory or a calendar, whatever calendar you use. You can use your broker calendar. They're all the same. It's the same events, news that's coming out. So we have to look at that. So prices, currency prices will move based on some of these factors. Now the currency is dependent on the country. So how is the country's economy doing will have an impact. So just like how the economy is doing will have an impact on the real estate market, same way how the economy is doing will have an impact on the currency of that country. So right now we are in this environment. So what is the monetary policy of the country will have an impact on how the currency is. Because if the monetary policy is, they're tightening the monetary policy, and we'll discuss monetary policy in another lesson, but when we come to the fundamentals, but right now we just want a brief understanding of it. So if the monetary policy is tightening and they are raising interest rates, then the investors want to go to a place that will pay them more, right? So if bank A pays them 1% and bank B pays them 2.5%, everybody wants to go to the 2.5% bank, right? Anybody who has substantial money or enough money where it will make a difference, wants to be at the 2.5% bank, even though it's only a slight difference, 1.5%, not, but if you have $5 million sitting in the bank, it will make a difference. So this is why investors would go to the bank that pays 2.5%. So similarly, it works in a similar way in the Forex market as well. So if a country is only paying 1% interest and another country is paying 2.5% interest, their central bank. So in that case, more people would want to invest in a country that is giving them 2.5% return on their money. Now, there is one more variable that comes into play there is how safe is that country? So risk again. So if a country that is not very safe and you don't know if what will happen, what government will be in the country in a month from now, people would want to invest in that because that's way too much risk. So let's say the risk was the same in all the different countries, then a person or an investor would want to invest in a country that pays higher interest rate. And that is called the monetary policy, or that's part of the monetary policy of a country. So if Australia pays 2.5%, more people would want to invest in Australia, which means they will have to buy Australian dollars in order to buy anything in there or put money in the bank there in order to take advantage of that. So Australian dollar will go up because all these people are coming in and buying that currency, right? So that will be the driving force behind the strength in Australian dollar. So Australia generally tends to be one of those countries that tends to have higher interest rates. So right now, everybody's interest rates are at all-time lows, but generally in the past, we have seen Australia has higher interest rates compared to some of the other developing countries or developed countries, I should say, like US, for example. Australia generally has a higher interest rate. So that's the interest rate. So this is part of fundamental analysis. So understanding the monetary policy is part of fundamental analysis. So monetary policy is set by the central bank, and they are the ones that will change the monetary policy to support the economy. So that's why the countries where the economy is really good, their currency will be worth more because more investors want to invest in that country because it's going up, right? There's more, they expect investments to get higher return, regardless of which asset class they invest in, they expect to get a higher rate of return. And that's why they would want to be in there. And in order to invest in a country, you need to buy that currency and that currency will go up. So if US was doing really well, the economy was doing really well, then more people would want to invest in the US, which means they will need US dollar. Even if they are buying equities on the stock market, you will still need US dollars. It's priced in. And US dollar would go up. So it is directly related to what the economy is. So that's our economy and monetary policy. Now there's also fiscal policy. Fiscal policy is set by the government. So when the government is supporting its businesses and citizens, that is a good thing. Now, the currency in terms of the monetary policy and fiscal policy can be impacted in different ways. So, for example, when we talked about tightening monetary policy, so when the monetary policy is going in the other direction, so the banks are actually not tightening monetary policy like we are seeing right now. So, when that happens, in that case, it's the opposite. So the currency will drop. So when we see central banks come and say they're going to provide more support, that means they're going to put more money into the market, more cash in the market actually reduces the strength of the currency or makes it go down because currency has a lot of supply now. There's an oversupply of currency, which causes a drop in the value of that currency. And that's a supply and demand issue, which is it applies across the board to a lot of different things. Just like if there's too much oversupply of houses in the market, the house prices will decline. If there's an oversupply of steel in the market, steel prices will go down. Same thing with soybeans, anything. When there is an oversupply, the prices will go down. So the same concept applies to currencies as well. Sometimes we forget that, but it is the same. The demand and supply concept will apply across the board. So understanding how these different variables impact us, that is called fundamental analysis. So this is why we need to understand when trade balance numbers come in positive, that means the currency will go up. When trade balance numbers come in negative, that is not so good for the currency. So this is why when we have positive news, so yesterday we had positive Euro news, all these PMI numbers. So PMI is Purchasing Managers Index. The easiest way or the first step towards learning all these different news means, so it's important for us to understand what the news means, what the true impact will be beyond just saying, oh, if the numbers are positive, it will go up. So the quickest way or the first step would be to go to the Forex factory. And if you click on this little folder here, it will open up the detail. And it will give you a quick idea of what it is. So it's very brief, but it tells you why this is important. So here, for example, PMI. PMI is Purchasing Managers Index. So purchasing managers are the first step to showing where things will go. So if the purchasing manager is buying more stuff, that means they are expecting their sales to be higher. So they expect to sell that stuff. Otherwise, they wouldn't buy it. Nobody wants to have inventories in stock where you are not selling anything. Now you have your money tied in inventory, and now basically you wasted all this money. By the time next season rolls around, the trends would have changed, and now all that money is down the tube. So nobody wants that, especially right now when market conditions are tight, funding is tight. Nobody wants to waste the money. So if the purchasing managers are buying stuff, that means they expect to sell it, which means the retail sales will be higher. And if the retail sales will be higher, which means the GDP will be good. If the GDP is good, that means the economy is doing well. So that is the relationship that we need to understand. And hence, PMI is an important number that we pay attention to. So here it will tell you what it means. So if actual is greater than forecast, it's good for the currency. So it will tell you right there. It will also tell you how often these numbers are released. They are released monthly on the third business day of the month, right? And then it will also tell you if it's above 50, it indicates industry is in expansion. If it's below 50, that means the industry is contracting. And this can be applied to the stock market as well. So when you're doing your market analysis for a particular stock, one thing you want to understand is how that industry is performing overall. And then you would compare that stock to the industry averages and see how that stock is doing as compared to the industry. But the first thing you would start with is the industry. And this applies to how to pick stocks in down markets and up markets as well. The best thing to do is always pick stocks in the industries that are doing well, because you have already basically put yourself in the front end. So a lot of people bought Hertz stock, right? That is pure speculation because Hertz went bankrupt. We do not buy stock for the company that is going bankrupt, because it is literally gambling. We are throwing our money and just trying to have fun to see if we will land in our direction, because other people are doing the same, but there's no intrinsic value in that stock. Right now the companies are not doing that well, all the rental car companies, because people are not flying, and people won't truly start flying where they are able to, auxiliary businesses are able to make money till we have a vaccine. So if we don't have a vaccine, these companies are not going to make money. So sure, you can make money in the short term by just speculating on the stock, which is very similar to gambling, and same thing applies to our Forex as well. We can just understand the technicals and just make money. Actually, you don't even need to understand anything to make money in the short term, because you just have to be right. And that's a toss of a coin. There's a 50% chance you'll be right, right? So you can take any trade and you can make money if you happen to be right. However, in order to stay in this game for the long term, we need to understand this, right? So if you take a look at any of the big financial institutions, any of the big the trading prop trading firms, or we have these other places that do the trading, our hedge funds and so forth, you can't become a hedge fund trader by just knowing the technicals. You have to understand the market conditions, and then you have to understand how everything works in relation to everything else. So if we want to be like those people, we want to be professional traders, we have to have an understanding of that as well. So think of yourself as a race car driver. When you're a race car driver, if you know how to drive the car, you you will be a good race car driver. But if you don't understand your car, then you're going to run into trouble. So this is why when you're a race car driver, not only do you need to understand the technical aspect of driving, you also need to understand how your driving will be impacted by water, right? It may be raining that day. We cannot control the environment. So it may be raining. So you need to be able to learn that. And then on top of that, it is good if you understand your car. So if you know how your car works, even though you may not be the one maintaining your car, but understanding how your car works and knowing when there's a problem with the car is very important, because then you have a chance to fix it, or chance of fixing it before it becomes a bigger issue. So this is why it's very important to understand the fundamentals, or these things that drive the price of any currency. Okay, so back to PMI numbers here. So it tells us if it's 50, if it's above 50, it's good. If it's below 50, it's bad. So see how in June here, May, it was horrible. It was 31. So economy was contracting, and it was 10.2 in May, which is horrendous, because that's really bad. Nobody was buying anything because everything was under lockdown. So nobody was, purchasing managers weren't purchasing because they did not expect people to come to the store and buy stuff, because everything was under lockdown. So now as things are opening, we can see this trend. It has gone over 50, which means the economy is growing. At least it's in positive territory. It's not as bad as 10. So that means there is an improvement. And as we can see here, it's still not quite, where we would say it's truly exceptional or a wonderful economy, but it's moving in the right direction. And that's what we are looking for. So this is what the economists are looking for. This is what everybody essentially is looking for. Central banks are looking at these numbers to see, to gauge the impact on the market. So so if you read through this here, it says, why do traders care about this number? It says it's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So that means if the purchasing managers are buying it, that means they expect to sell it, which is where we started, right? So that's what I would highly recommend. If you're serious about your trading, you want to do this every single day. So things can become overwhelming, right? So in order to reduce the overwhelm, what you could do is first start with the important one. See this one, any red news will be the first one to take a look at. So let's take a look at another one that is usually very important, is the non-farm payroll. So if you look at the non-farm payroll here, so same thing here, I would highly recommend reading it. So it will tell you what this is, why the number is important. So let's take a look at, we'll take a look at not the hourly earnings, but this one here. Okay, so this is the non-farm employment number. What does it measure? First of all, it measures the change in the number of employed people during the previous month, excluding farming. So we're not looking at the farming industry, but we're looking at everybody else who is getting jobs or who is employed. And then it's released monthly, usually on the first Friday for the month. Okay, so this is a vital economic data released shortly after the month ends. The combination of importance and airlines makes for hefty market impact. So this is non-farm payroll is usually a big a big event that moves the market. So why do traders care? Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. So if people have jobs, they will have disposable income. If they have disposable income, they will take it to the market and and spend stuff on things that they want as opposed to need. So when people are spending money, businesses are making money. And now when everybody has money, they're paying their taxes. So it just creates that flow of money in the economy. So this is why we need to be able to understand these numbers. So it's good to know a lot of these numbers, but the starting point will be to go to the big ones like this, go to the red ones, and this will be your homework assignment. Every day you want to take a quick look. It literally takes like less than a minute to read this. At first, it will not understand it because you just are not thinking, you don't know what's going on. But over time, you will start learning it. Okay, another thing to do here from practical perspective is also to go to sites like Reuters.com, go to markets under Reuters. So we don't care about their main page. What we care about is markets. So I highly recommend looking at this type of news here. So this will give you a brief outlook on what's going on in the market. And this is where we really truly need to understand how other things will impact us. So even though we are trading Forex, and yes, we are concerned about currency prices, but the currency prices are impacted by other asset classes. So there are multiple asset classes that people can invest their money in. So there's the stock market, there are commodities, so oil, gas, and then we have cattle, and we have soybeans, coffee. There's a whole variety of commodities that are sold in the open market. So you can invest the money there. You can invest in currencies. You can invest in cryptocurrencies. So there's so many different. You can do bonds. So a lot of different asset classes that exist that people will invest money in. And generally, what happens is investors will invest money in an asset class where they make the most money. Right. So if the investors are making more money in the stock market, they will go to the stock market. If they're making more money in commodities, they will go towards commodities. So when everything is going to hell in a handbasket, they will go into bonds because that's the safest investment. And generally, the way the portfolios are designed, they don't generally go into one asset class. They will move things between different asset classes, and there will be proportionate allocations that will be made. So there will be certain percentage that goes towards the stock market, certain percentage towards the bond market, because they can't just throw everything in one basket and call it a day. So there is money constantly flowing from one asset class to another, and that's what makes the money flow. And this is why we need to understand how other markets are doing, so that we can understand, will the money be flowing out of currency, which is cash, and will it be going into another asset class? So when the stock market is doing really well, so if you go take a look at the stock market, so if the stock market is going up, more money will be flowing into the stock market. So here, see how the stock market was just going gangbusters? This means the money is flowing into the stock market. People are expectant, they are optimistic, and they're wanting to spend. Now, this is sideways here for the last little while. It hasn't really done much. It's just been stuck in this little range. That means people are not sure, right? Investors are not sure what's going on. They're waiting for the stimulus bill. They're waiting for other things. So when the stock market is going sideways, that shows uncertainty in the market. But when the market was dropping back in March, February, March, when COVID first started, we saw a big drop in the market. And this is why everybody thought the sky was falling. Market was dropping, money was flowing out of the stock market into cash. And this is why the currencies were going up. So there's always this flow of money back and forth, and we need to understand that. And this is why. Okay, so from practical perspective, what do you do? from practical perspective, the first thing is to understand fundamentals. We take a look at the news, and the reason I suggest looking at the Forex Factory and the news there is because it's bite size. You can do, there's only a handful of events, especially if you just look at the red or the most critical events. There's only a handful. There's be 5 maybe, and that's a lot. So there's generally be 2 to 3 that are important. So you can just read that. And as you do that over and over again, you will develop the understanding. So second step I highly recommend is looking at Reuters and Bloomberg, both of those newspapers. So these are the business newspapers, and they will have the whole political sides and stuff. Like, I don't care about politics. I hate politics personally, but you may like them and enjoy them, and that's totally fine. But when it comes to trading, politics will play a role. And what these newspapers do is they will put that in perspective of the market, right? So regardless of how you feel about somebody or something, these papers are more focused on the market view, and they will take that into account. So we're not bashing anybody, we're not following anybody. This is what happened in the market today. So this I would suggest, so when you go to Reuters, I would suggest go to markets. Under the market section, there will be one featured article every single day, in the morning, in the evening. I highly recommend reading that. So in the beginning, you will likely not understand it. It will not make sense to you. But as you start to read it every day, and the article will literally take you 4 minutes. It tells you right at the top, it will say it takes 4 minutes to read. So 4 minutes, not that long, right? So we can't say we don't have time. If we don't have time to spend even 4 minutes on this, then we should not be in this business, right? So same way, if you want to be fit and you say, I don't have time to go to the gym, or I don't have time to eat properly, then that may not be the best time to focus on that goal, because you're just going to kill yourself, and kill yourself in the sense, sorry, you are just going to work super hard, and you will just be in this tug of war between yourself and yourself. And that's not the right way to achieve a goal. The best way to achieve a goal is you set a goal and you make space for that in your life. And that's the only way to get that goal. If you keep saying that you don't have time, then you may want to just reconsider the timing and your goals and take a look at it. Most of the times when we want to learn something or do something, we have to make time for it. So that's what I will say on goal achieving. But it's a 4-minute read. So I would just suggest reading this. It will tell you what's happening on Wall Street. It will tell you what's happening, House Speaker Nancy Pelosi. And so it will tell you everything about all this stuff. So it will talk about politics, but in from the view of the market, and that's what we care about in this. So read this. It will tell you a bit about stock market as well. It's just good to know. Don't really need it for Forex trading in terms of how Apple is doing or how Facebook is doing or Google is doing. However, it will tell us how NASDAQ is doing, right, when we know about these stocks. So good to understand what's going on. So I'll give you a bit of an overview. Okay, so that's as far as I would go in terms of fundamental analysis at this point. I will include extra videos that will go into some of these in a little bit more details from the fundamental side. So those things are not critical right now. The first step, again, like I would say, read the Forex Factory thing here, and then read the Bloomberg and so forth. Then go to those videos where you want to learn a deeper understanding. But if you have just a little bit of time, those are the 2 things that I would suggest doing first. Okay, so next thing I suggest from fundamentals perspective and just news perspective would be looking at the news feed. So the news feed is provided by the brokers, and most brokers will provide the news feed. It doesn't matter which broker you are with. I like the FX Pro feed because this is, I believe, the Bloomberg feed that they have. I used to pay for this feed back in the day. And now things have gotten easier for us as traders. Now they provide it for free. So we'll just log in here. So it's a benefit. This is a Squawk. I used to have it open on my computer all the time when I was really day trading. Now I've taken a step back. So I just let my trades run now. So I don't sit in front of the computer. But if you're trading a particular session, for example, if you're trading, let's say the London session, which tends to be the most active, then you want to have this on. It will actually, as soon as the news comes in, I find so Forex Factory takes like 2 minutes to really show the results of it. This will tell you right away. Somebody will read the news to you. They get it as soon as it gets released, and they'll read it out to you, important things. And during the day, they will also have these bullet points, and they will talk about different things that's coming up. So when I say we need to pay attention to what comments are coming out, this is where you would go to get these comments. So for example, ECB Lane, so it says weak demand and rising economic slack have added a disinflationary pressure in an environment that is already characterized by low inflation. So that's not the best type of news. And of course, Euro didn't do so well today. And here's the relationship between the two. So these bullets is what I would suggest. They also do a daily wrap up at their daily summary at the end of the day. A good idea to go check them out. So with FX Pro, it's free. I don't have a live account with them. I just have demo account, and they still provide the Squawk. Or you can also go to, I think, Forex Squawk or Rand Squawk. You can pay for this service and get it, but you can also go this route. So that's another option. So those are some of the things to understand from fundamentals perspective. So we covered fundamentals, we covered technicals. Another thing that we need to understand, third thing would be the market sentiment. So market sentiment is very important because it's not always the fundamentals that will drive the market, right? So for example, when we look at the stock market here, stock market didn't drop. Well, it did drop because of the fundamentals. They expected the fundamentals to change. Okay, the expectation there is the sentiment, right? So market will shift before the fundamentals show up. And that's because the market participants are expecting that. The expectation creates the move, not when the data comes out necessarily. It's the expectation of something happening that will cause things to go up. So when COVID happened, we saw a drop in the market, and that was because everybody was expecting things to be shut down. We'll have a really bad environment. People will be concerned. There may be losses of life and so forth. So there was a lot of concern in the market. And this is why we saw a big drop in the stock market. So those things hadn't happened yet, but the market moved prior to those things happening. So as soon as we found out, or as soon as I should say, it became clear that this thing was imminent, or it was coming up in the next little while, the market just dropped before the businesses shut down and before everybody went into a lockdown, because the expectation was that that particular thing would happen. So it's the expectation that creates the move, and that is the market sentiment. So how the market participants are feeling is the market sentiment. And then we saw all the central banks step in, and everybody started throwing money at the markets. This started providing support. Pretty much everybody cut interest rates across the board from central banks. We have never seen such low interest rates from central banks, at least as far as I can remember. Even in 2008, 9, they did cut things drastically, but because the banks and everybody had gone through that time period of 2008, 2009 financial crash, they moved much, much faster this time than they did last time. And as a result of that, people started buying. And this is why we saw the stock market go up like crazy, because there was all this money that was available. And the expectation was when there is so much support available, then we're going to see the market go, or sorry, the fundamentals will improve. But so far, the fundamentals haven't really changed much. Businesses have started opening, but the numbers are not nearly where they were. It is just very, it's just not there. A lot of businesses are closing down. There's a lot of problems that small businesses are having. Some of the large businesses have shut down. The businesses that had been around for years, decades, shut down. So from fundamentals, true fundamentals, things haven't improved. However, when you look at the market had a party essentially since March because of all the money that was available. So there was a lot of, when there's money available, people are buying stocks and everything goes up. So the market sentiment created the move up, right? And market sentiment created the move down during COVID. And when the elections happen, it's the market sentiment that will create the move. So generally going into elections, the stock market tends to drop because of the uncertainty, especially if there's a lot of uncertainty. If there's a clear winner, then the markets will be focused more on what that person's policies would be or what that government's policies would be. But when there's uncertainty in the market, like we have, or in terms of who will win, like we have now, markets tend to go down prior to that. Another thing would be when the markets are, when there is fear in the market, where there's risk in the market, markets will drop. When there is optimism in the markets, markets will go up. So another thing that is keeping the US stock markets up, at least, is the expectation of that 2 trillion stimulus package. So when government gives more money, to the businesses, the expectation is the businesses will then spend that money. They'll hire people. They'll invest in factories and so forth. And as a result, there'll be money created or moving in the economy, and that's what pushes the stock markets up. So the expectation that there will be more stimulus has moved the markets higher. So this is where markets started turning because of the expectation of that stimulus bill getting passed. It hasn't passed yet, but the expectation has moved the market up. So that's where the sentiment comes into play. So all of those three things are important. We do look at technicals, and we will always look at technicals. However, understanding the environment that you're playing in, looking at the field before you start your play, is very important as well, because the conditions on the field will have an impact on the adjustments we'll have to make. So if the fundamentals of will be this will be the driving force, and price will move within those fundamentals. So we need to understand the conditions in the market, and then we also need to understand the market sentiment, because market sentiment can swing things or sway things. And this is where we see on the field as well, in sports. So a team that may be losing, their heads are bent, they just don't, their body language is very defeated. And then somebody will say, okay, guys, let's get it together. Let's do this thing. We know how to do it. These are the things we need to do. And that is the market sentiment. And then they come back and they win that game that nobody thought they would be able to win. That is market sentiment. So their skill set hasn't changed. Their technicals haven't changed. It's the same, but their sentiment has changed. So when the market sentiment shifts, things can change drastically, and it has nothing to do with fundamentals. So the field conditions may be the same, and the technicals, their skill set is the same, but what has changed is what's inside. The sentiment has changed, and that led to the win. And similarly with the markets, when the sentiment shifts, that will cause the market to drop or go up. And it's the anticipation that causes it before. So when the banks say we will raise interest rates, or we are thinking of raising interest rates, the market will go up prior to the interest rate change. Same way, if the central bank says we're going to cut interest rates, we are thinking about negative rates, for example, the price of the currency will drop before they actually make that decision. So so after the decision, it will move a little bit, but prior to that, it will move a lot. So those are the three factors we need to consider when we trade. So if we want this to be our long-term career, we have to understand all three. All right, so that's all I have for today. Questions before we wrap it up here?
Oh no, I'm all good with that. That was good, thank you.
Does it make sense?
Yeah, absolutely. Yeah.
Okay, perfect. And this is why when we do the daily analysis, we always start with the fundamentals, right?
Yeah, with
and
the
then
news
we go
and
into
whatnot.
others. Yes.
Yeah, perfect.
Awesome. So we'll wrap it up here. You guys have a wonderful day, and I will see you later.
You bet. Have a good afternoon. Talk to you later on.
Bye.
Bye.
If you want consistency in your trading, we invite you to join our daily market analysis calls, where we provide the levels to find the best entries and targets on an intraday basis. For a 1-week free trial, please visit www.tradingwithvenus.com. Thanks for joining us today. With much gratitude, your show host, Raman Gill.